Yes, so if we try to answer the first question first, I think there has not been a lot of the bad news priced in. At the same time, there hasn't been a lot of the good data from the US being priced in. As you know, the ISM manufacturing in the US is doing better than expected. At the same time, same figures in Germany are doing bad. And we had also German factory orders suggesting that German economy will probably have maybe a third quarter with 0 to potentially negative growth. So I personally think that the euro dollar should be trading closer to maybe something like 108.50, 109. And as you mentioned, we're about 112 now. And if we trade below the 2019 low, which is the 111.75 level or so, if we break that level, then we could potentially see the euro dollar starting to trend lower. And probably tomorrow with the non-farm payrolls, that could be what we need for the euro dollar to actually start to trend lower. So I think the numbers are gonna be good. I think we're gonna be pretty much maybe around 150,000, maybe slightly higher than that. So it's gonna be enough to keep the unemployment rate unchanged and to most likely keep wage growth strong. And those are the two factors that the Federal Reserve are looking at right now. In regards to the prior figures of non-farm payrolls, some people were saying because of the government shutdown that a lot of people had to take extra jobs, and that caused the non-farm payrolls just a few months ago to be really, really high. And then when they went back to work, the non-farm payrolls figures were much lower, as 20,000. I personally think that 20,000 number is probably going to be revised higher. I don't think that is the true state of the economy. Another thing as well, which is really interesting to keep an eye on, is the ADP, as you said. Now, the ADP figure itself is not useful to predict what's going to happen with the non-farm payrolls tomorrow. But if you look at the standard deviation of something like the ADP, it's much lower, and I think it's a far more reliable indicator of the state of the U.S. economy. Finally, as a third thing today, take a look at the initial jobless claims that were out earlier today. They're not showing any weakness in the labor market right now. Yes, so what's happening specifically with the Australian dollar and the New Zealand dollar is that both of those central banks are dovish, and that is why people are not paying attention to the very strong stock markets. We're going back to maybe these markets will be more driven of interest rate differentials than a classic risk on, risk off, as we have seen over the last few years. I think people are going to say, look, the U.S. economy is doing good, interest rates are high. Who's going to raise first? Probably the Fed. Who's going to cut first? Probably the RBN said. So I think the narrative is changing, and people are going to start to look at these currencies differently. So it wouldn't surprise me if we do have a stronger dollar and stronger stock markets, something we have seen in the past, but not necessarily in the last year or so. Okay, so the biggest development, as you know right now, is that for the first time ever, the two biggest parties of the UK are talking with each other. I'm quite surprised, given the importance of Brexit, that this has not happened before. It's very common in other countries that, when you have something so life-changing, that everybody gets together and discusses it so they find some sort of a plan. So I think what's happening now is actually that they will hopefully try to figure something out, not before April 12th, I think. Rather, Brexit is going to be delayed, and they will hopefully, or not hopefully, but I suspect that they will potentially find some sort of a deal, Labour and Tories together, and we will have some sort of Brexit, but it's not necessarily going to be a hard Brexit. So from this perspective, I do think GBP/USD can trade slightly higher, so it can strengthen, but with short-term volatility, just about anything can happen. So I'm advising my clients not to trade GBP pairs right now.